The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Monday edition, first day of the trading week, and of course, thank you, Steve Rhodes, for a great introduction. But even before Steve, we got programming coming here to you all day, 8 o'clock. We've got starting off with the good grief, just missed the name. Global markets. A look at the global markets with the stellar analysis that comes right at that time. And in fact, what we're going to be doing is having programming all through the day, from 8 o'clock until 6 o'clock this evening. So stay tuned, and hopefully we'll be able to give you education, be able to point you to the direction that we're looking at in terms of studying the charts on a technical basis. And let me go straight to the market. The Dow was down a little bit more earlier on. It's down 45 at 16,915. You've got the S&P down 7 at 1971. And then all of a sudden disappeared. You've got the comp index down 25 at 44.24. This is going to be very interesting. You've got gold up just $1.20. We'll talk about gold in a little while, because if gold becomes the factor of fear, that is I always call it the currency of fear, it usually happens very suddenly and then accelerates in that direction. So far, we haven't seen that. So gold is trading right now at 1304.60. Silver is up a tad, up 5 cents at 20.69. High-grade copper is holding well, but it's had quite a pullback from those recent high. As long as it holds in the threes, I think that's okay action. And then, of course, you've got the dollar, which is down a little bit at 81. This is going to be very interesting, because the dollar depends on what you're looking at. If you're looking at the index, the dollar has gone to a leg E, possibly a peak E right now, with fabulous technicals, 95%. 95% in the stochastic. MACD still good. And then you've got the DXU, the September contract, in leg D, possibly making a peak D with the same strong technicals. I got a sign here that says, yeah, the dollar could pull back a little bit. I don't want to jump too many things at once. Let me just finish this 120-minute chart. I was showing you a little in the very beginning the E-mini. And that's going to be really interesting. Why? Because, look, ESU 14, the 120-minute chart made this large arch formation, tested the 200-period moving average at 1968, and then plunged below to the 1960.75 level. 1959 was the round number low. This really kicked off the big rally that started on the 21st of July. That was the second part of the rally. The rally started on the 17th of July, back at 1942.50. But this one that came in, starting a trend line support level, took it all the way to 1985.75 peak E, and then it came down very sharply. That 200-period moving average is like a magnet. Now, here's something very interesting. I'm going to introduce it right this moment, because to me, it's very important to be able to look at all the different scenarios. For my subscribers of my opening call, and we've been short for a little while here, what I'm really looking at is the 120-minute chart of the Dow has come down in leg D to the 16,877 level. Simultaneously, as I showed my subscribers this morning, what I had said is that there should be a leg D before a pretty decent rally can unfold in the Dow. And if that leg D happens earlier, then later in the day you could see a rally. And lo and behold, the VIX, the volatility index, went 1 penny above the 1275 high of Friday. and then boom, took right off, and it went where? To 1364. It's trying to fill that gap, the gap that was there from the at 11:30 on the 18th with a high of 13.55. We went just fractionally above it. Pull back from that high bar of 1538 in leg F with a low of 1453. So you can see it's very important that very often, as you're getting to a leg D in the 120-minute chart of the volatility index, you monitor it carefully. We didn't want to add any short positions without, how can I put it, without a decent rally in the market itself. Why? Because that potential was there, and we didn't want to be part of the sacrificial lamb by shorting this morning when in fact it could be a pretty nice bounce. But I'd said that I don't think the bounce will last all that long. Could go into maybe Tuesday. We're going to be watching that. But the fact that the Dow was down and the S&P was down, let's see, the S&P was down this morning to the 1967 level. So it's 6 points off that, 7 points off that. And it held the trend line support in the daily. The Dow is holding the trend line support, but it's a different kind of analysis to what I've got here, which I showed my subscribers this morning. Well, over the weekend, I've been sending charts out as I finished them over the weekend. Look, you see that I drew it in, I think this was over the weekend. I'm not sure. But it was there for subscribers this morning when they looked at it, the most recent Dow chart. And it showed the Chapman wave inside wedge. That's that dashed pink line support. Well, where did the Dow go this morning? It went right to that support level exactly at 16,877. And where's it bouncing to? To the trend line resistance that used to be support and is now resistance at 16,967. I love these trend lines. You take one line and you just move it to the most important points of contact, up or down, and this is what you get. So to me, that says quite a lot. And the fact that the 120-minute chart has held both the red line up channel support and the 200-period moving average, which is at 168.30. The low today is 168.37, missed it by 7 cents, forming some kind of a Chapman wave Roman candle. But when it comes, in this particular instance, it'll be coming into lows in the 120-minute chart, certainly not in the daily. So that allows for a little bit of a pop. And I've already drawn in an arch formation. And that arch formation says 169.50 in the diamonds is very important support. So resistance, and it could even go a little bit higher, but then I suspect we'll make some kind of an arch formation there. So I think we've covered a chunk of things except for one, the volatility index in the daily. Look at this. Had a nice rally, stopped at the, I'm forgetting now which one that is, stopped at the one line. That's the 200-period exponential moving average. That's the simple moving average. The pink line, the kind of pinkish line here, is at 13.40, and 13.60 is the 200-period simple moving average, and that in fact is at right there, 1360. The high today was 1364. So very nice action. Here's a little close-up of the VIX making A, B, C, D. Let me just type that in. You'll see right there's the up arrow, and we will go to calls as soon as they start coming in. Most importantly about this particular chart is that you have a cup formation. It's attempting. It's going to be tough to do right now without much further weakness and some kind of further selling based on some kind of a news event. But the high of 1364 needs to go above 1453. That was the low of the candle of the 17th, that reversal candle. We'll see. Stochastics at 87%. The MACD is still good. So we're favoring this particular index as a means of analysis. And one other thing quickly, I was asked about it. I'll just give it. This is the NQ. You remember we were talking about the NQ, the E-mini NASDAQ 100 September future was at a low of 38.54 back on the 17th, ran up to 39.91.25 on the 24th. Pull back. It's under the 9-period moving average. The MACD is not good. Stochastic's trying to flatten out. Going to watch this real closely because the cues, this is based on the NDX 100, the cues have been, look at this. Oh, I beginning of the week, let's look at charts. So here's the Dow INDU. I'm going to add the little 100. Oops, I didn't mean to do that. So let me just get that back again in Q114. Get that away, move it, booms. Got it out the way. 120-minute chart, I'll put it right here. Now look at this. The Dow INDU. In the 120-minute chart, there's a bounce, and the bounce could take the Dow possibly to 16,000. It's at 16,915. It could go to 16,970s to 16,990s if there is a bounce that finds a little bit more energy to the upside. The MACD and stochastic in the weekly charts have just turned down, but are still in very positive territory. However, the close this week in the Dow below 16,000. I'd say on the weekly chart, give it a little room. 16,830 would be very negative, and the daily has already gotten a peak D, and this is a sell mode in the Dow. When we look at the S&P-X, SPX.X, let me just go there for a second. I anticipated a sell signal. Theoretically, I should have waited for the stochastic to go under 80%, but all the other indicators were saying that was a peak D in the 120-minute top chart. The daily made a beautiful doji with a breakdown on Friday. This is not B. This is almost certainly going to be a peak E in the daily chart. F with a doji candle in the weekly. Boy, we better be watching this really closely. Let's go to John in Philly. John, how are you?
Hey, Basil. I'm very well. Hope you had a good weekend, sir.
I did. Thank you very much.
Excellent. Basil, I wanted to ask for your views and assessment on both gold and GDX, which is Market Vector's gold portfolio tracking stock.
Right.
Both rallied into peaks the week of July 7th, and
right.
In the daily chart on the GDX made a Chapman wave peak G,
Correct.
and the gold made on the daily chart a Chapman wave peak F.
Correct.
Both have now corrected decisively. I am looking and probing on the buy side for the bottom of a correction. I'm wondering what you see on the daily charts here, and if a rally ensues, and if gold goes over 1345 and GDX over 28, I would like to ask what the implication would be as far as the Chapman wave count is concerned, please.
Oh, those are really good questions, but I'm going to add another factor, if you don't mind. Some of the gold stocks, some of the important gold stocks, have actually been holding very well. So we've got the music coming up. I'm going to go to the GC. I'm going to go to gold. I've got the August, but I've also done the December contract. We'll look at it in depth. And John, thanks. A great call, and we'll get to it as soon as I get back from these important messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and let me just get rid of this. There you go. Yes, the GDX trading at 2666, down 16 cents, and that is called the Market Vectors Gold Miners ETF. It is very important to always be aware of divergences in the gold index, because very often I shouldn't say very often, I'm talking about over decades now, but if you're talking shorter term, it isn't that often. But very often over the decades, there are periods where the gold stocks act better than the gold itself, and other times gold itself acts better than the gold stocks. And, of course, what you really want to see is them moving in unison. It just makes it much easier. If you're looking at the GDX has made a rising series of lows, and that's from the low of the 15th of July to the low of, last Thursday at 25.95. And gold itself, if I go to the GLD, has gone to lower lows. I tend to put a little bit more weight on the gold contract in terms of the larger trend, but in the shorter trend, very often gold stocks tend to say, hey, we're acting very well, and then gold might follow. So this is what I'd be looking at. In terms of positions, now I'm not sure if you've got a position on now or not, John. But
Basil, just to let you know, to answer that question directly, I had bought back in late May, early June, had booked gains And just to let you know, I am coming back into longs. I'm not fully long, but I entered a partial long position just under current prices.
Okay. So here's the other thing. Well, there are really three factors involved. The first is gold hasn't really responded to the Middle East. It's kind of a ho-hum situation. So it hasn't acted as a currency of fear at this particular time. Other periods we know that it has, but it hasn't right now. So that can be excluded just for now. When it does happen, it happens real suddenly, but at this point it isn't there. The other factor is that the gold stocks, if I look at GG, gold core, making higher highs and higher lows, that's important because that can create a successful lowercase h pattern that turns into into a cup formation. And all I would say is that if GG breaks above 2860, there's a real good chance it'll go to the peak D at 2939. So there wasn't 28. That's 2860. If you look at Rand Gold hasn't even blinked. It's sitting there in a beautiful upside consolidation. It has made some kind of an oval pattern. I'm just putting this in more to show a trading range than the stork leg formation. But this becomes a propeller shaft to the upside if Rand Gold, trading at 77.97, is able to trade at any point above 80.80 to 81.50. If it's trading there, it doesn't have to be a one-to-one from the low of that would make it 17 points, or let's call it 14 points from the low of this candle right here of 73.55 back in the 15th. But it'll be very positive. So I think that looking at individual stocks can tell one story. Looking at gold, especially if I know you don't like to use the gold continuous contract, but I use it because it takes me back so many years that it's very important for me to get a picture of it, even though it's smoothed down. That H pattern that can go to an M pattern, lowercase h, right there, going to a lowercase m, is still in force in the monthly chart. The MACD is trying to turn positive, and yet, even if it turns positive, it hasn't yet given you a reading that says, oh, I'm so strong, I'm going to go above the highs of March of 2014. So in that particular instance, all I can say is that the third factor here is that the monthly charts on gold are still saying to me, probably we need to establish a pretty decent low, and that low will come if and when, let me just give you the price because I don't want to use the continuous contract for that. So I'm just going to, for now, use the August. Okay, that says until there's a 111.87 low back in December of 2013, until that is pierced and then springs back strongly into the cup formation, all I can say is I have to be of the same opinion as far as gold is concerned. That's not to say some of these stocks can't have move higher. You're talking about golds, and here's what I wanted to say to you. In terms of gold, to have started a position, I think, is good. I would probably say to you, I would add to it, not on weakness, but if the continuous, now let me go to the contract itself. I'm going to August for now. If that August contract goes above 1310, I would add to it.
Thanks so much for the...
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Going in order, I'd like to just get to a couple of emails here. A question. DB and BCS, that's Barclays and hedge funds, DB, are weak, and Goldman Sachs and MS is Morgan Stanley are in buy mode. Well, let me just do that. That's a very good question. But before that, I just wanted to mention once again, just in case it was cut off. So for John, who was talking about the gold and gold itself specifically, rather than the gold stocks, other than using the GDX as an example of a positive divergence, I would be buying gold itself only on strength. I wouldn't buy it on weakness. And the reason being that if you buy it on strength, it'll be improving the technicals, and the technicals will be following the strength in those gold stocks that I had mentioned that were acting well. And, of course, fairly tight stops, because if it does get going, because of that H pattern, it needs to move very quickly. So Goldman Sachs is trading up 42 cents at 175.76. Nice action. Didn't even know about Thursday and Friday in the marketplace. It was just holding well. And my suspicion is that with Goldman, so that's the day. So it's 120 is 1, 2, 3, 4. Perfect. Another peak D right there. Yes, Goldman's having a high level consolidation, and this is something very important. There are a few stocks. We have one stock in the portfolio that I call it a portfolio that we have in my opening call, and that's acting very well right now, just down fractionally. It had a spectacular week, and now what we're looking at is that some of the stocks that held really well during the week are either pulling back a little bit or holding above good support, but maybe aren't leading right now. Goldman, in fact, is leading a little bit because it's up 0.19%, whereas the S&P are down. So I like this, and the weekly is very strong. So how do you explain this? I remember over the years that there are times when housing stocks move differently to the market. I remember when the semiconductors, the SMHs in this case, move very well. And there's a whole backdrop of the market itself looking very weak. Just periods I can remember like that. And in this case, the SMHs are down 19 cents at 48.89, making a nice candle right to that left side, right side price support level at 48.46. Today's low is 48.47. No, that can't be right. 48.64. 48.64. My eye told me that it was 48.64. Okay, so we went lower than that, went down to 48.47, bouncing back above 48.64. So this is going to be a very important moment in the SMHs. Can the doji candle ABC and leg D become a trough D? And can the stochastic and MACD turn up enough to get the SMHs back over 49.32? Just can't remember what I said here. The SMHs we're looking at. Yeah, I was waiting. I wanted to rebound. We just missed shorting the other day. We were, in fact, short the SMHs. Now, so that's Goldman Sachs. I'm relating it in the financials. This is acting very well within the financials. XLF is trying to come back. It's down just 4 cents at 22.85. This is a high-level consolidation. So it's the IWM that was extremely weak, retesting the 112.20 level from mid-July, went to 112.23, 3 cents higher. We'll see if this turns into an H pattern that has some kind of rebound potential, or we'll know by the end of the day what's going on. And a couple of things that I want to look at here was, okay, so we looked at that Morgan Stanley acting well, but I'm not sure what the wave count is. It can't be an H because there is no H, so it has to be a B. Wow, if that's a B, that says it should still go to a C and a D. F, G, A. You can't count it as anything else unless it went A, B. No. I'm calling, at least for now, I'm calling it a B. Once in a while, you get a disruption of this particular thing because it is a leg D in the weekly. So I'll be watching Morgan Stanley acting not badly today, but my suspicion is this is some kind of a top. We've got to be careful because it closed below, it's a 32.99. It closed below 32.50 says, oops, starting to take on water. So that's that. And now we've got Dan in Baskin Ridge. Dan, how are you?
Doing well, Basil.
Good.
I wanted to touch base with you about SMHs, and I had another question, if you would, about the call with the gentleman out of Philly. I was wondering about also your long-term thoughts about inflation versus deflation, but I could take that call up, if you want to answer that off the air.
So, no, you know what? I think it relates to a number of things. Some years ago, I spoke about the semiconductors, the chips, becoming commodities. And since there wasn't any inflation factor in a very important component of the makeup of businesses who all had to have computers, that could have somewhat of a deflationary effect. But it was only one part of the whole deflationary puzzle. That was then. Since then, we've seen a fabulous rally in the SMHs, the semiconductor. This is called the full title is it's the Market Vector Semiconductor ETF, and it's gone right back to where it was back in 2000 and I think it was. Yeah, 51.30 was the bar, the high bar of May of 2001 after it came down 50% from the 100.20 all-time high. Well, all-time high, it was. This is so typical, folks. IPOs, the SMH's IPO in May of 2000, as the market is just the hottest thing. In fact, the S&P had already made its high, and the Qs. What happens? A month later, June, after its IPO, it goes to 100.20, and that's it. It's never come back there since, and it's gone down as low as 12.95. So, yes, in fact, I was just talking to my wife this morning. I said, you know what? There's a particular cheese that I like to get, and I noticed that the price is way higher. In fact, it's about 27 to 33% higher than it was, if I'm correct, a year ago. That is huge. So I tell you what I'll do. I'm going to put down SMHs, and over the period of the next week or two, we'll talk about inflation. We'll talk about a potential period of deflation, whether there's which one will predominate over the coming few years, especially when we've seen inflation. Very good interview and article recently on all the factors of what is inflated, and there's very little that isn't inflated at this particular point. So let's put it aside, other than for me to say, quite a while ago, I've spoken about a period of deflation, and in many ways there has been some deflation, but I don't want to get carried away and just extrapolate from that empirical data that we're going to go from deflation to inflation. It's actually, when you look at the relationship of buying around the world and the number of shopping malls, the number of cities that have sprung up and now changed older areas into mixed-use areas, you say to yourself, that really implies that the markets have to keep going higher and higher, and people have to have expendable income that they can use to keep shopping and shopping and shopping all around the world. So that's something I want to talk about later on. But other than to say that the competition, just here in my city of Newton, Massachusetts, the Garden City, I couldn't even tell you how many shopping areas are being turned into either the little strip mall type thing or into real malls, and I don't know who's going to be able to sustain them. So that's my biggest concern. Now let's go to the SMHs. We've got that out the way. The 120-minute chart has just, I'll type this in, it's gone to a leg D, and if this bar, which it looks like it almost certainly will become a peak, a trough D on the way down, we call them troughs, if there's no lower bar below the low of 48.47, that's going to say if the SMHs go into this candle a little deeper, this 120-minute candle, and hold there for 2 out of 3 120-minute bars, so there won't be enough time today, it has to be tomorrow, but it goes below 48.75, there's a good chance it's going to retest the lows of the day. But if, in fact, it closes by the end of the day about 49.16, that's the high of the day so far, that's actually the opening price, that's going to say 49.31 to 39.41 to right there. 49.37 will be the upside target on a bounce, and it could even go a little bit higher than that. That's the near term. Now, is your question more of a, where is this headed to over the next month or two?
Well, as a matter of fact, I did get into XOXS on the 22nd.
Yes.
On the 22nd at the close, because it looked like it tested, I guess, I don't know what that symbol is, hanging man. Oh,
okay, yep.
So I did get in a few days ago, and I was more concerned about setting a stop on it.
Oh, okay. That's a little bit easier question, and I'll tell you why. The way the 120-minute chart has come down, it says that the entire area in the SMHs between 49.90 and 50 points, let me go to this candle here, 50.32 is huge. That kind of resistance says that, this is on the shorter term, the 120-minute chart, that it probably will not break to the upside and it probably won't even fill the gap between 50.10 on the 24th and the close on the 24th at 50.02. Number one. Number two is 49.87 on the daily is the 9-period exponential moving average. Now, normally what I'd be doing is that one of the targets on the downside, 48.64, has already been met. It could continue lower, but I always say this is where you can expect some kind of a bounce, and I always put this in a little mini arch formation, lowercase h formation. Says, just based on this half circle, that the area of 49.44 is going to be very important. What does 49.44 correspond to? It corresponds to the 120-minute chart, 9 and 200-period moving average area of resistance. So I feel comfortable with that. That's number one. Number two is the day is young. The action that we've been looking at over the past couple of days, from Friday, Thursday's close into Friday, and then Friday's close into today, says to me that the volatility index, which is holding quite well, the VIX is at, let me just find it here, the VIX is at 12.97. Not great, but it is showing that it doesn't want to go back to the low 12s just yet, or even the 11s. That's saying to me that some kind of market trend has possibly been established, and that is a change from up to at least sideways with a little bit down, and that will increase to down if the Dow goes underneath 16,850 to 830 over the next couple of days, and the S&P goes underneath 1963 to 1961. So now let's get back to the SMHs. The most important factor that I'm looking at here is that there's a leg F, and today will start to generate the possibility of a peak F. That's the sixth highest peak in the Chapman wave methodology at 51.17. But the MACD has not crossed negative, and the stochastic is still very strong at 85%. So it's going to take the daily time and price, lower highs, and it must make lower lows for that to kick in. This is only a leg 8 to the downside, a big move from 51.17 today's low in the 48s, but it's only a leg 8 to the downside. And that says to me, bounces must be expected, but if those bounces don't come, and instead the SMHs, the semiconductor vector ETF, takes out today's low and starts to trade into the gap of the daily gap between 48.37 and 48.54 from mid-June, that's going to tell me that almost certainly the daily has gone from a sell signal to a very deep sell mode, and that the weekly chart will suffer and will have very limited upside. It might even make a little bit of an H pattern, but it's starting to show for the very first time since it was underneath the 9-period moving average back in mid-May of 2014 of this year at the 43.90 to 45.35 level, that the 9-period exponential moving average is going to become even more important, because on Friday, this coming Friday, if the SMH is closed below 48, that accounts for a bounce, a pullback, maybe another bounce, and then a lower low. I've got to watch real closely, because that monthly chart in all the time frames for almost all the indices is saying, hey, watch out, because if those weekly charts start to deteriorate, your monthlies in E and F, in many cases, they could be talking about some serious time consolidation. So I think you're in a good position. So all I'm going to say to you is a pop to 49.50, between 49.50 to 49.87 says be a little bit careful, but it should turn around and curve back down at that point.
May I hold the line, Basil?
Yeah, hold the line. Okay, I'll be right back with Dan.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's down 21. S&P's down 3 on this, 28th of July. And we're on with Dan and Baskin Rich. Dan, you wanted to follow up with a question, yes?
Yes, sir.
Okay.
My inquiry was, it seems like bubble has been perpetuated for past 15 years, and it's just going from one market to another. But the one that doesn't really seem to come in, and I don't really hear anyone talk of a bubble, is the cost of our college education, and it just seems like the money flow is gone. It just seems like into that bubble that nobody really sees as a bubble, and I wanted to get your comments on that.
I will talk about that during the week because it's a very, very good point. I've spoken about this for years. I've said, what is with the cost of education? But you know what? I've spoken about it in terms of what colleges have to do and spend today to get new students. This is what they think. And that, you remember I spoke about Boston University building this, I think it's called complex It's where you can train. It's got sports activities, etc. And it's a beautiful sports arena. And it's like any club that you could, very expensive club that you can go to. But this is now nothing compared to what's going on. I will talk about that because it's a very, very big factor. It's the same factor that forces the museums that I've been talking about for years now to double their size. Every single museum of even ones of non-consequence in terms of the real world, not that they don't have great stuff, but they're smaller museums, have started to double in size. So I want to talk about that in the context of inflation. But in the meantime, back at the ranch, let me just, let's get to that later in the week. Okay, Dan, great question. I will get to it, okay?
Very good. Thank you so much, Basil.
Thank you for calling. So let's do this, folks. We're just about to wrap up. We've got Larry Pesventa coming on. It should be a wonderful show with Larry. And I'm going to do this. Let me just run my numbers. I'm going to go right to the VIX index. As you know, I love to look at the VIX, the volatility index, pulling back from today's highs. High was 1362 was the high on the 21st. Today's high is 1364. So we're going to call this a little mini A and a little mini B right there. Now, the 120-minute chart has made its peak D, and it always says, be careful, you're going to get a bit of a bounce now. All I can say is that if there's an overlapping wave, a Chapman wave technique of an overlapping wave, we get to a C, and suddenly there's leg D that breaks about 1538 anytime this week. Be careful to the downside. But in the meantime, the rotational market continues. Look, Apple's doing very nicely. Facebook, which our subscribers own, is doing very nicely here, trading at 74.80. You've got Verizon trading very nicely. So there are a handful of stocks that are just ignoring this move. But the majority of them, like a Netflix, have taken a real big beating. AZO, these stocks have really been AZO, that's AutoZone, car and truck parts. This is becoming more and more specific, stock specific, but it now becomes index specific as well because there's a greater number of stocks that are weakening. I'm cautious here. We've got put positions. Short positions. We hope to add to the short positions. At the same time, I do not mind going long. There are stocks we want to buy. I like them. I like the action. I like the area they're in. So this is a very important phase. Don't be afraid to be short. Don't be afraid to be long. Just put in stops to cover yourself if something weird happens opposite to what you're expecting. That's number one. Number two is, in terms of the S&P, I'll just go there for now because the Qs are actually holding pretty well. The S&P, I've given it a sell signal. I've given it a little hat over here. But any move by 1 penny above the recent high of 1991.39, and I have to say, oops, wrong for now. It's just a selective rotational correction. But a break under 1965, S&P goes much lower. Stay tuned for Larry. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.